Objective is just to understand what is this financial management about. So this is the background, not to study entire financial management for this foundation course. So there are few definitions of financial management. Say in the name itself, two words are there: financial management, or I will modify it, management of finance. And finance is very big terminology. Actually, people are under impression finance means money. That is not so. That is not exactly so. It includes many things. So we will see a few definitions of financial management. So first definition is like this: financial management is the activity concerned with planning, raising, controlling, and administering of funds used in the business. See, this is only two-line definition, but explanation will be, say, in pages. Okay, this definition is of Gutman and Duggar. Now we'll try to explain this definition. Financial management is the activity, say actions, some doings, that is called as activity. And that activity is concerned with these things: planning, raising, controlling, and administering. So the explanation will be like this: the activity concerned with planning of funds. Say funds, that is capital. For any business, funds are required. It may be proprietorship business, partnership business, HUF business, or the business is run by company. Proprietorship business, the funds are required to be raised by that proprietor himself. Nobody will generally invest in proprietorship firm. So far as HUF is concerned, Hindu Undivided Family, then that will be the funds raised by that karta of that family. He may raise the funds from banks, financial institutions, or by his relatives, friends, etc. And he will be required to plan the funds for that organization. Now I am coming to partnership firm. Say for partnership firm there must be more than one person. So partners may raise the fund, or there may be one partner who will invest his funds in that firm and he will not do anything. He will be called a sleeping partner. He will not take part in the activity of business of that partnership firm. And there may be some other partners, they will administer the funds, or they will make the planning about, say, how to administer the funds. Say how much money should we invested in particular activity of that business. So it is planning, raising, and controlling. Say controlling is very important in financial management. One part is raising the fund. Now, first of all, it will be planning how to raise the fund. Suppose it is a company. So how company can plan to raise the funds? First of all, it will be from the shareholders, then it may be from banks, it may be from other companies, it may be through NCD, non-convertible debentures. So that will be raised by public, through public, or they may issue preference shares. So that money will come with them, it will remain with them for particular number of years. So according to this author, financial management is nothing but planning the funds, raising the funds, controlling the funds, and administering the funds for business purpose. See, the scope of financial management is very, very vast. It starts from planning and it ends at administering the funds. Now we'll see another definition of J.F. Brandley. So Brandley says financial management is that area of business management devoted to a judicious use of capital and careful selection of source of capital in order to enable a spending unit to move in the direction of reaching its goals. See, every business has goal. I will give you an example. Say goal of increasing the revenue. So they think that every year they should grow by say 10%, 15%. Then goal for profit making. The management is of the view that the profit of the organization should be doubled in coming 2 years. So for this, funds are required because you have to increase the production and then only you can increase the sale, and by sale you can increase the revenue of that firm, and when the revenue is more, profit may be more. So according to this author, what is financial management? They say financial management is area of business management. So this is part and parcel of business management, and that is devoted to judicious use of capital. Say funds are there. Suppose company has collected 1000 crores. The story does not end there. The company must use the funds judiciously. So for that, whatever expenditure they are doing, say capital expenditure, so there must be planning how much you want to spend, say for purchasing of raw material, purchasing of machinery, maintenance of machinery. Then the expenses required for the salary of the people, etc., etc. And that is why they have to do the careful selection of source of capital. Source of capital. Say there are various sources of capital, but which will be having very less cost. See, it is like a home loan. Now you want to take a home loan. From which bank we will take the home loan? There are several banks. So you will see that you will take the home loan from such a bank where the rate of interest is minimum, and that bank which is lending you minimum rate of interest, you have to see that whether there are processing charge or any hidden charges, and if they are say taking the hidden charges, then the rate of interest will be more. Another bank which is ready to give the loan, say by 8.5% per annum, and there are no hidden charges or there are no processing charges, then the effective rate of interest will be 8.5%. And you will go for that 8.5% interest for your home loan. Another organization is ready to give you 8.25%. So in the beginning you were attracted by that figure 8.25% because it is less than 8.50. But you were not aware that there are hidden charges. They are also collecting processing fees, and when you included in that, you found that it is more than 8.5%. I'm just giving example. So this is called as the source from where you will raise the capital. In order to enable spending, you need to move in direction. So why you are doing all these things? Why you want to select a particular source of capital? And why you want that cost of capital, that is called as cost of capital, it should be minimum. Why? There are certain goals that is called as business goals. Just now I told increasing revenue, profit and all that. So this is the definition of Jeff Brandley. Now next definition is by Mashi, and the definition is like this: financial management is the operational activity of business. Operational. It is ongoing activity. Suppose the one company has raised say 100 crores, they will spend within say a span of 6 months. Again, they will require 50 crores. So it is continuous process, which is responsible for obtaining and effectively utilizing the funds necessary for efficient operations. So for operation, money is required, capital is required, funds are required. Then you can continue the activity. So in that sense, it is for efficient operation of the organization. Suppose the organization is in financial crunch, so they may not be able to spend for purchasing of raw material. Then what will happen? See, if there is no raw material, then manufacturing activity may come to halt. That is, there is no work. Then how you can give the salary to your workers? And if you are not giving salary to the workers, there will be litigation. They may go to the court of law. And thereafter, you are not earning anything. You are not making the profits. And you are not able to pay the salary. Then you may think of retrenchment. And for retrenchment also, you have to pay the retrenchment compensation. So this is vicious circle. Say, to run your industry, to run your business constantly, the funds are required. For growth of your business, funds are required. And all these things will come under financial management. Now, what is the scope of financial management? Financial management, to be more precise, is thus concerned with investment, financing, and dividend decisions in relation to objectives of company. Such decisions have to take care of the interest of the shareholders. See, this is very vicious circle, I will tell you. Now I want to invest in the share capital of a company, suppose. Then in which shares of company I will invest? The ongoing company, profit making company, growing company, blue chip company. One more terminology is there in stock market, that is called as blue chip. So blue chip company has to see that there are good amount of returns given to the shareholders in terms of dividend. If company is giving good amount of dividend, then only the shareholders will remain with that company. Otherwise, what they will do, they will sell the shares. If majority of shareholders, if they sell the shares, then you know the law of economics. Supply is more and demand is suppose same. Then how it will impact? The price of the share may go down. And this is one of the indicator in the market that if the price of share is falling, then something is happening in that company. So you have to please you, that means that company has to please the shareholders because they have invested the money and there are expectations. They are upheld by maximization of shareholders' wealth. Now, what is the shareholders' wealth? See, I invested say 10,000 rupees in the share capital of Reliance Industries Limited, say 10 years back. And today what is happened? I am taking just example. Today my investment of rupees 10,000 is 1 lakh. So 1 lakh rupees is called as shareholders wealth. Individual, I am taking into account individual. And suppose there are lakhs of shareholders and they have purchased or they have invested say 5,000, 10,000, 1 lakh, 10 lakh. Then the total amount as per today's market, whatever it comes, that is called as shareholders wealth, which depends upon increase in the net worth. Now net worth, what is net worth? There are various definitions of net worth, but I will tell you simple definition because it is foundation course and you must be aware, just aware of all these things. Say every company has asset and liabilities. If the assets are more than liability, that is called as positive net worth. And if the liabilities are more than assets, then net worth will be negative. Now I am taking the figures. Suppose the assets of the company are 5,000 crores and liabilities are say 2,000 crores. So 5,000 minus 2,000, that comes 3,000 crores of rupees, that will be the net worth of that company. Another way of defining net worth is that say share capital, that is paid up share capital, and plus that will be called as net worth. Capital investment, capital invested in business plus plugged back profits for growth and prosperity of the company. It is for such reasons that the market is prepared to pay a lower or higher price for the shares of some company or the other. If you see, say, the shares which are listed in the market, some shares for years together, their market price is 10 rupees only. It goes to 11 rupees, again it comes back to 10 rupees. It may go down to 9 rupees, then it may go to 10 rupees, 11 rupees. So they are revolving between, say, 9 to 11 rupees only. But there are some shares in the market. Say, when they came in the market, the price was 10 rupees. And after 2 years, say, price is now 300 rupees. Why it happens? Why? The price of particular shares in the market, it multiplies. Why? It depends upon the performance of net worth of the company, growth in revenue, then growth in profit, and very good amount of dividend is given to the shareholders. So capital invested for such reasons that the market is prepared to pay. Market, that is the people who invest in market, buyers, sellers. So they are prepared to pay lower or higher price for the shares of some company or other. So you can attract the public provided your business is good, your revenue is, say, attractive, the profits are higher, and so on. Core financial management decisions. When you study financial management, then you will be able to take the decisions in respect of financial management. And few of them are called as core. That is very basic. Investment decisions or investment of funds. Suppose there is company and it is in the business of investment of funds. So where to invest the funds? Should I invest in real estate? Should I invest in gold? Should I invest in stock market? Financial decisions or sources of fund, from where I will raise the funds. Should I raise by issuing more shares? Should I buy preference shares or by IPO or by public issue or by debentures? Dividend decision or distribution of profit. Say how much dividend I should pay to the shareholders of the company. Should I pay 20%, 30%, 100%? So that is called as the decisions in the respect of payment of dividend.